Chris here, Better Investing. Today is February 7th, 2026. Decided to do this one offline. Just here to, it's early in the morning, got my cup of coffee. Wanted to take some time to just kind of look at the markets, right? Kind of go from there, really. We had a crazy week this week. Hopefully a lot of folks are profitable. Had a bounce on Friday, sell off on Tuesday, a little continuation, broadening out on Wednesday or Thursday. I can't remember which day. I think actually it was Thursday, the broadening out in terms of the selling. But yeah, I just kind of wanted to go over, some thoughts about the market, some things about trading as well, things about investing. Got some free time, so why not, right? Um, so I don't have like an agenda or anything. I think for me, it's just wanted to really just kick the shit. One thing I do want to say, like, if you're a trader, if anyone comes to you and say this will happen or this price is going here with like any degree of certainty, um, take that information with cautious. One thing I learned with trading, and I've been trading since 2018, 2017, 2018 is kind of when I started. Um, and one thing I like to say a lot about the market is no one knows shit. No one knows shit, right? Like, unless you're this guy that's sitting there with $100 billion and you're part of those group chats, no one knows shit. Honestly, we don't know if the market is going to go up tomorrow. We don't know if the market is going to go down. We don't know if it's going to go sideways. As traders, what matters is your R multiple, how profitable you are. And to me, again, I expressed this, previously, your equity curve, right? That's what matters for a trader because you're going to be wrong. The main thing with trading is not staying wrong. Your least favorite color should be red. I would definitely suggest, for people that's trying to get into trading, understand that concept first, because it's the most important. It's how you survive with trading. It's a long game, right? You got to think about this. You can be trading for 50 years, right? It's not a it's not something that labor intensive in terms of physical, besides the mental capacity of it. But this is something you can do for a long time. So think about that. And it's funny because like, I'll have a trade. For example, I traded iBit, um, Thursday night, and I only had 100 shares, right, at 34. This is after hours, right? I kind of caught it. I only had 100 shares at $34, right? Now, I bought it here at 34.26 or so, and I had took it off around 35, and then again around like 36. You're not going to see it here because this is iBit based on the Nasdaq. But I continued to hold it for overnight, and then I sold it around like 8 p.m. So you have to go to the Boats exchange to see that. But I was in the trade for an hour, and I made $200, right? And some people are like, oh man, you should have went heavier, or why didn't you hold longer? I was satisfied with making $200. Now I've done had trades where I made 3 grand, I done made $1,200, I made $800, right? And I had some trades I make $70, I make $90, right? What matters to me is that, hey, I took a trade, I'm satisfied with the move. Yeah, could I have held overnight? Yeah, but I didn't want to. I mean, Bitcoin was in a downtrend. I could have woke up and the stock's back below $34, and I've been like, oh man, I should have sold it all yesterday. Right? You always play that game of woulda, coulda, shoulda with trading. And for me, it was like, man, I just made a good move, right? I don't typically trade after hours. And I was like, well, let me buy 100 shares, risk $20 type of thing. and I walked away with over $200 an hour. You know, think about that. Like, how many professions do you know where you can make $200 an hour? So that's one of the main things for me. Like, I know some people say, "Oh man, you gotta hold on to your winners, right? Like, as long as you can." And I agree. I've been working on that, and actually, I did really really well this year. I mean, yeah, really really well this year. But on top of that, I'm gonna try to see if I could look at my TradeZella real fast. This week alone, um, like my profit factor this week was like 5 times what I typically have on a profit factor that I average. When I say profit factor, that's like my R multiple, and that was pretty impressive to me because I was able to hold on to some trades and let them work. Um, so let me go here. Let me look this week. All right, this week. Go here and check this out. Yeah, and so my profit factor on the actual week was 6.1 profit factor. So for every $1 I lost, I made $6. That's what it meant. And I was fine with that. I was like, man, that's that. I mean, that was pretty impressive to me that I was able to do that. Um, but I guess like again, like for me, I have a full time job. I have a part time job that's almost like a full time job, right? And I'm in I'm more in a managerial positions. I'm not just someone who can just sit here and hey, you got some work assigned to you. Like I'm always having to jump on calls, put out fires, speak to the client. Um, that's the business I'm in. I'm in the um, make the people happy business. That's the business I work in. So you know the reason why I like day trading is because like when I do have some downtime, right, and right, I know right now for me like my time is going to get my business busy season is coming up, but like you know from like September to like right now, I haven't had too much work where like okay, I had times or pockets where I can really trade. Right, we had the government shutdown. I helped out a lot, and then you had the holidays come up, and then the end of the year, a lot of the clients that I work with they take leave for all of the year. January is usually slow as people start to get back in. Right, then I thought I was like, well, I know for sure I'm about to get busy beginning of February. Had a snowstorm, had the other a little 2 3 days shutdown last week or whatever, right? But for me, like with trading, I have to live through the candles. Like for me, and I think I'm really really good at interpreting price action, seeing price action. What I use is I always have up SPY, I always have up QQQ, and I necessarily don't trade them, but I'm just looking at the market direction, right? I'm trying to get an understanding of what's going on, what's buying, what's going on with QQQ. And it's not something like I base my positions off of what's going on in SPY and QQQ, but it helps me kind of confirm what I'm seeing. And all I have up is the hourly chart. I don't narrow down to a 5 minute chart unless we get to a particular area. I want to kind of see how price is reacting, a little more in the weeds. But for the most part, I have the hourlies up, and I'm just looking at the hourly candles, seeing how they're forming. Right? Okay, we're forming a hammer candle on this hourly push right at the open. Let's see how this next candle opens. Next candle opens, continues to drive higher. All right, I might find a stock that's kind of undercutting or pushing higher. Right? I might want to get involved with that, or I might see a situation. Hourly candles are pushing. We come into an area where could be looking like it's forming a lower high, right? You start to see the reversal. You start to see the wick on the hourly. I start to look for shorts, right? And that's the way I've kind of played the game, for my trading. And that's what kind of helps me. And I would say I take a good chunk of trades, right? I can take 15 to 20 trades a day. And people are like, man, do you see that many setups? I'm like, the way I trade, yes. The way you trade, you may not, right? But for this year, um, I'm looking at my stats on TradeZella, and I definitely suggest you recap all your trades, use some type of trading software or Excel spreadsheet to kind of track all your trades. I go in and I look at all my trades. I don't put notes on all of them because some of them are just a little scop here and there. But the ones that I might have lost, when I'm like, man, I need to really focus on what I did wrong here. Always make sure I track those. Um, but what I was trying to say is this year, and even like my total since I've been tracking using TradeZella, my trade win is 52%. This year is 58%. Historically, since I've been using TradeZella, my profit factor is around 1.65. This year, starting off, my profit factor is 1.89. Right, so I'm improving on my profit factor, and I'm also hitting more on my trade wins, trade win percentage, and then my day win percentage. I'm sitting at on the year 80%. I've had four red days. I'm looking. Hold on. Where's my? Sorry, I had 5 red days so far. One day I didn't trade. I think that's when I was on the airplane. Yeah, I took like 1 or 2 trades when I was on vacation, like each day, like just to kind of have some skin in the game. But I didn't really, I couldn't really trade. Um, but yeah, man, I think that's the biggest thing for me. I do want to admit, I took a step back from options last year, right? Doing really really good the entire year, and then around like August September, where like August is kind of my busy season going into the end of the fiscal year, fucking around with some options. I had like a 15% drawdown, and I was so upset with myself. I looked at my commissions, and I see how much I paid in commissions. I said, Jesus fucking Christ. I said, I paid that much in commissions, and I realized that, like, when you take options and you have to pay commissions, I use Charles Schwab. That like if you buy, let's say you buy 10 contracts, right? 35 cents is a con, right? That's $3.50. It's $7 for the total trade, right? To enter and exit. I'll say if you lose $100 on the trade, really you lost $107. And that $7 starts to add up every time you take a trade, right? All right, say you lose 4 trades on the day, right? You're down $400. But now you got to add on the 7 times 4, right? Right, now so now you done lost an extra $28. It may not sound like a lot, but that compounds onto the loss. And what I ended up doing was I stepped away from options completely, and I just focused on taking the same setups I like to take, and trading it using shares as my vehicle, because I don't have any commissions. It's free to trade. There's some fees. There's like a 2 cent, 3 cent fee on a total position, right? So if I'm in, cost me 3 cents, and then cost me 3 cents to get out. That's 6 cents total, right? Much big difference than paying $7. Um, and man, I noticed that with that, kind of being more incorporated in my style, I saw shallower pullbacks in my equity curve, right? I'll draw down based on my trading style, right? But I was able to kind of I was able to kind of get back up to my previous highs much quicker, by not focusing on using options. Right now, I've dabbled a little bit in options this year, but I'm trying to still be wary of that. I'm trying to say this to myself here, is that I'm not looking to really get back into that option game. I like shares. It's much easier for me to navigate. It actually opens up a broader list of stocks I can actually trade, Because right, when you're just focused on trading options, you have to go for the liquid options, right? So most of the time, you're trading stocks that are, you know, Microsoft, Apple, Tesla, Nvidia, AMD, right? Stocks that really are heavily weighted in the SPY and QQQ. So when those chop around and do some bullshit, right? Those stocks most likely chop around and do some bullshit. And then if you try to go find, you know, a stock like ASTS or Bloom Energy, right? You go to those options, the spreads are all over the place, right? Or the option chain is like the premiums are so high, it's like, man, do I really want to try to trade these, right? And that kind of just prevents you from trading those because you can't play the option chain, so the stock's off your list. But by using shares, um, it opens up you open up a universe of stocks that you probably wouldn't trade because they don't have options, or the options don't they're not liquid. They're not liquid enough. The spreads are too wide, or the premium's too much, or it's been running too much, so the IV on them is juiced, and I know about the IV, and I'm not going to get the same move if the stock pushes $5. Well, you know what? You trade that in shares, the stock fucking pushes $5, you make $5, right? And the funny thing about like options, because I really went down that rabbit hole trying to understand options down to the T, and I'm a pretty smart guy. I'm not trying to toot my horn here, um, but it's almost impossible for you to get it down to a penny of how much you're going to lose on an option. You can be in a ballpark, right? But it's really, really hard to get an understanding of how much you're going to lose on an option, based on how much um, the stock moves. Right now, if you play a little farther dated, you can have a little better grasp of that. But the closer you are to expiration, it is much harder to get a good idea of how much you're going to lose, right? And then the thing I had with option was like, and I said, oh, I'm only going to risk $100 on this option, right? Boom, your $100 gets stopped, and the stock really never invalidated, right? But you were playing options, and by you playing options, the decay, the data, all the extra shit that goes into the Greeks with the options, right? You're not allowed to sit in that position. Me, I can sit in a trade using shares, and when it invalidates based on price action, I can just get out, right? And a lot of times the stocks I play, they don't have. I'm not playing stocks that have, a dollar, no spread. Unless I played SNDK, right? Sometimes those can get about 80 cents, right? But I've been able to, really limit my amount of shares to something I'm comfortable with. But right, when you play those type of stocks, like what, you put your stop in, most likely like you're gonna get stopped out very very close to where your hard stop is. So that's the good thing that I really liked about shares, and day trading them. For me, and I do have a goal this year, and that is to get more into swing trading. Something that I really wanted to focus on is that is to kind of enter positions, with the mindset is I'm trying to make this a swing. Sometimes what happens is, some of my day trades, because I'm looking at them, looking at the daily chart, the way I'll trade it. Some of those I'm hoping that they can turn into swings, right? If I can get enough cushion on some runners, I'm definitely taking profit day one. That's just me. I like to pay myself for that time spent, putting my money to use. I want to be able to pocket something, and then see what I can do with the remaining shares. But yeah, I think that's the biggest thing for me. Um, Anything else I want to talk about? I'm just thinking off the top of my head here. Um, Trying to think here. What else I wanted to bring up? Um, what do you want to talk about with shares or trading? Oh, yeah, I think another good thing to remember with trading is that I'm drawing blank, so give me a second. Let me think of like what else I can speak about. Actually, I was thinking about it while I was talking, but then I forgot about it while I was talking. So let me think about what I was gonna say. I thought it actually was a good fucking point. Oh, hard stops. That's what I wanted to bring up. Hard stops. You know, a lot of traders, and I started out this in the beginning. I use mental stops. All right, I'm gonna tell you right now, if you don't have a hard stop on your position, you're flirting with an amount of risk that you can't even fucking phantom, right? And I'm saying this from experience. You're flirting with a uncertain amount of risk that you can't even phantom. And the reason I say that is because the one thing with mental hard stops, right, is that it still requires you to click the button. And things happen very, very quick in the market. And if you don't have a hard stop on, you know, the price can push in the wrong direction and you would be down so much, so fast that you'll freeze. You'll literally freeze. You'll become frozen at how much you just lost on paper if you click sell. And you kind of become delusional. You be like you don't know what to do. You're like, man, maybe I can get back to break even. I might have to average down so I can get back to break even, right? And that type of scenario is what really, really, really damages your account, right? And so for me, I always put hard stops on. This is why I say I barely, let me correct myself. I don't want to lie here. I barely trade after hours just because of that, right? If I'm trading after hours, it's a small size. If I get swiped, right, I can try to get out, right? I might lose more than I thought, but I probably, you know, won't get blown out, right? But for me, when I put a position on, even if I want to use a mental stop, right? Say I'm like, I got a mental stop. Say if I'm trading this, right? I got a mental stop. Say if I'm trading this flag right here, for example. Right? It's a 5-minute flag, right? I'm not saying I would, but say if I was trading this flag, right? And I got in right here, right? And I know really like my stop is here, right? But I might give a little bit cushion up to here. Like I'm putting in a hard stop like up here for sure, right? Now this isn't like my defined hard stop. Like this is not where I'm, trying to. Let me say this is not the spot where like I'm definitely risking up to, but in case something crazy happens and it just blows out, at least I just limited my risk, right? Rather than it just goes straight through. Now we're all the way up here, and I'm sitting here like, holy shit, I'm fucking smoked, right? I can survive this, right? But if you're in a position where it just blows out and does that, man, it's tough. So for me, no matter what I do, right, I'll have my mental stop. I know I want to stop out here, right? I might give it a little bit wiggle room, right? See, man, maybe a push and pull back, right? But for sure, I'm gonna have definitely a for sure hard stop above my spot where I'm thinking about. Same thing to the upside, right? And I think that's very important because I know a lot of people that trade on margin, right? They want to get 100% of their account into a position. They want to get 150% of the account in a position, 200% of the account in a position, and you're playing a dangerous game. You're playing a dangerous game if you don't have a hard stop on, right? And my profession is I'm in the audit field, right? So my profession is all about risk, right? That's what we always think, like, what's the financial risk here? What's the operational risk here, right? What's the performance risk here? Um, and that's kind of been my mindset. I'm more risk averse, right? I'll put on size, but man, when I put on that size, it's a hard stop, right? I don't care what's going on. When I put on size, I'm putting in the hard stop for sure. right? It might be a situation like, man, I wasn't expecting to lose this much, right? I was only trying to risk $200, but you know what? If it ends up going double that, well, I got a hard stop. Like, but damn, I lost double the amount I expected, right? But it's not triple. It's not a situation where I just blow out. Like, whoa, like damn, I'm frozen. And I think that's that's one of the biggest things with trading. I think a lot of new traders kind of mess up with um, is not putting on hard stops, right? And just saying, I'm going to let it work. I'm just going to let it. I'm just going to let it do what it do, right? That it just doesn't work that way. So, um, yeah, that's kind of like my little my Saturday espresso talk I wanted to mention today. I think it was I think that's something important for traders to really understand. I mean, I remember starting out trading. Man, I remember wanting to quit. I remember blowing accounts. I remember being up crazy on the year, giving back crazy gains. And the thing for me is to really just I stuck at it. Um, I've recapped my trades. I've became more patient, right? Not taking the trade and having my finger glued to the fucking mouse, ready to click sell or ready to click buy. Just kind of letting it like, okay, if it breaks here, I'm taking the trade, right? Like just being more decisive in my plan, right? If I see something that I like and I like where it's at, I'm going to click buy. If I see something I like and I like where it's at, I'm going to click sell. Being very decisive with that has allowed me to execute. And sometimes, and the thing for me is like seeing things just go crazy down or crazy up. I'm not in that habit of no more of chasing. Right now, does it happen here and there? Right, I remember I chased the silver trade early this year. I was like, damn, I definitely chased that. Right, that's gonna happen. Right. But for me, man, I'll watch the stock go. I'm like, oh, I can't trade that now. That shit's just way past going. Right, like I remember I was looking at like yesterday. Right, stocks were ripping. Right, and I almost got caught in wanting to take this Palantir right here. I had this move right here, and I looked at this. I was like, oh man, this is kind of flagging out here at the five, on the five. I was looking at this. I remember looking at this. I was like, man, this is kind of flagging out right here. I can kind of see it, right? Then I just seen the move that it just had, right here. I'm like, man, this thing's going. And then considering that it gapped up overnight, it's already up $10 or so, right? It's already up $10. You go back to right, we go back here and we look at the daily chart. Let's do this real fast. What can I do? How do I get to the daily? I'm acting like a rookie here. All right, go back to the daily chart. The average ATR is 8.42. All right, so it's already exhaust. Um, it's daily range, right? Considering the overnight gap, right? I'm thinking about that, and I'm like, yeah, I'm not taking this trade. I'm not taking this trade, right? You gotta think this is up here and it's already pretty much exhausted. The closing is right near its closing perspective, but like considering the overnight gap up, like it was at 125 right here at 125, and now it's up here at $12. It's almost two delta, two sigma, or two standard deviations above its average true range on the day. I was like, nah, I'm not taking that. Even if you look at it from like the lows of today, right? The range from the lows. Take it here. Almost there, right? Almost there. No, probably got what about 20% left on the ATR. I was just like, no. I was just like, no. Then I see how extended it got away from the moving average. I was like, no, I'm not taking that. So, that's something for me that helped me a lot. That helped me a lot. Not chasing. Looking for like really really small entries on stocks, and risking pennies. I got a saying right now. I'm using it in like my little Discord chat that I'm in. I say I risk pennies to make dollars. Or I risk cents to make dollars. And I just that's just how I work, right? That's how I work. I'll be quite frank with you. I'll look at a 5 minute. Look at so like really for me, like my style really sits on from a day trading perspective, right? I always have the daily up, right? So this is my daily, right? For example, right here's the daily on Tesla, right? Here's your daily on Tesla. So I always have this up, right? That's one thing. I have this quad chart up. I'll have the 5 minute up, right? I'll have this 5 minute up. Then on a separate monitor, I have SPY and QQ up on the hourly chart. And on here, as you can see, I have the 1 minute, right? A lot of people don't like the 1 minute. I actually do. I'm not even gonna hold you. I actually do like the 1 minute. And the reason why is because I'm able to get really tight entries. I'm looking at the 5 minute. What's going on here? Right, I'm looking at the 5 minute. Right, I'm like, okay, we got here, and then I'm buying it off the 1 minute. Right, and I'm using my stop, based off of what I see on the 5 minute. But I'm getting a really good entry off a 1 minute chart. So like, I'm trying to think if I can explain it. Let's go back. I'm not gonna say if I took this right, but let's do this. All right, got it right here. Like say this 10-15 candle on trying to think what's a good candle. Probably gotta go back. All right, I'm pretty sure I traded this candle right here. Yeah, this is Thursday. Yeah, I made a shit ton of money on a Tesla this day. Right, so if you go back to like that Thursday, that area right there is kind of marked out here, right? So for me, right, I'll look at it based on what I see on the 5 minute. So this 5 minute candle right here is right at 310, right? So if we go to 310, that's this candle right here, right? That's this candle right here. The low of that candle is 396.71, 396.71. I would just look at it, or I'll have the 1 minute up, and I say, all right, 396.71. Wasn't it 396.71? Yeah, I think it's this candle right here, 396.71. Right, this is the candle, right? Because this is the 10 minute candle. I mean, this is the 5 minute candle. 1, 2, 3, 4. Right, yeah. I'll take it right there. Right, I'll take it right here. I might have on 200 shares. Right. Where I put my stop at, right above here, right? And the reason why I'm saying that is because I'm not risking a lot of money, right? For a move that can happen, I can get in on a good size. So like that's the thing for me. So like I would buy it, or I would short it right on that break, right? Boom, I'm in. I already know I'm only risking. Come on, don't. Right, I already know that for me, I'm only risking right above that sell candle, pretty much. That's all I'm risking. This right here, I'm risking 50 cents. If I got 200 shares, now I'm risking $100. Right, I don't need a big move to start to take some off. Right down to here, even down to VY, that's a 1.5. Right, this is 2-to-1 risk to reward. Right, I'll pull off half my position, or I'll pull off a third of my position, and I'll just let the rest work. Right, I'll just let the rest work. When I see it kind of reverse, I'll get out. I'll be moving my stops now. Right, but I went from only risking 55 cents, right? But like I said, I always put on a hard stop to some shit like above here, right? And I say, all right, well, if it does some crazy shit, well, I'm probably gonna be losing close to $200, right? But that's if it just wicks and just goes, right? If it just there's a news reaction, right? Like, damn, I lost $200. I wasn't planning to lose $200, but that's my hard stop, right? But I know for me, I'm getting out right above here, and this is where I say I risk cents to make dollars, all right? But I'm also, this is looking at it from the 5 minute, right? I don't have to look at the 5 minute, the chart, to understand that this is the 5 minute price action, right? And I know exactly where I wanted to take it short at, right? Does it invalidate for certain up here? Yes, right? But I'm not looking for it to retrace already back here, right? Because if it does retrace all the way back here, it's probably going to go even higher than that, right? I want to just get a really, really tight entry right above where the action or right where the action started at. And that's interpreting price. That's interpreting price action. You know, that's my trading style, and everyone has different trading style. The one thing I see about the market is you probably heard it is there's multiple ways to skin a cat, and that's the saying in the market. And the other thing in the market, it was funny because I said this about I think I said this about Robinhood a while ago. I said, man, Robinhood looked like it's short, and people were like, no, I think it looks like a long. And people were saying, well, I think it could put in a, you know, I think it might push and go higher first, and then depending on what happens there. And all I said was that's what makes markets. Indecisions of price. That's what makes markets. You think one thing, another person thinks another thing. They're going to trade it based on what they think. You're going to trade it based on what you think. It's a zero-sum game. One wins, one doesn't, right? Or you could be winning, and I can be down. You won the beginning of the trade. I'm still in the position. I win the side of my trade, right? And that's the thing, right? And I'm not saying like, oh, well, it did what I thought it was gonna, did what I said it was gonna do. No, I said it back up in here. I said Robinhood looks like it's short. Right back up in here into the declining EMA 20. I said that looks like a short, right? And it did cascade back down to the area where I thought it would hit, right? I was able to trade it this day. I didn't hold any, right? I didn't like the way it got brought up, but then it popped right back into that area where I mentioned the short, and it rolled over again, right? But I'm not saying that could it have went higher? Yes, it could have, and I just mentioned that that's what makes markets, people. Disputes over price. One person sees another. One person sees one thing, another person sees another thing. So, but yeah, that's my thoughts on trading. You know, one thing I'm really good at is deciphering bullshit. The one thing I learned in my accounting class back in college. My accounting professor, she said to me, every accounting, every auditor requires to have professional skepticism. And it's not that I don't believe you. It's just that I need you to confirm what you're saying, right? You need to validate your position, right? You need to validate with evidence, right? Right. That's the professional skepticism that it's just kind of built into me because of my profession. Right. There has to be some validity to what you're saying, and how do I get that validity? Is through you being able to provide some evidence or some evidence. Yeah, provide some evidence to kind of support that. I guess what I'm trying to say is that you know when you see a lot of people on Twitter or social media that brags a lot, that shoots a lot of their P&L, says they never miss, they never do this. Take all that information with a grain of salt, right? Unless they're able to produce audible records, right, showing you their equity curve, right, showing you their P&L. Take everything they say with a grain of salt. I don't care about screenshots, right? I don't care what they said they did. Just be cautious of that, because when I started out trading, I gravitated to that, right? I gravitated to those social media posts when this guy said he made 20 grand in a day, and I was like, man, they made 20 grand. Man, I wonder if I can make 20 grand in a day, right? And I was like, you start to try to figure out, man, can I do that? What do I need to trade to do that, right? Trade your fucking account. I don't care if someone makes 15 grand and you only made 150. Trade your account. That's the biggest part, because what happens is, and I'm going to admit I have a therapist. I haven't spoke to him in a couple months. Probably should. But my therapist, I talked to him about my trading, we spoke about dopamine, right? 'Cause I mentioned him in the past. I said, man, I had a problem with you know, I could be up, 2 grand, and I'll sit there and I'll just overtrade and give it all back and end up down 1,000, right? You're like, man, that's a 3,000 flip, right? And he mentioned to me, he said, then that's your dopamine, right? You're not satisfied from a dopamine level of what you did on the day, and that's where I kind of reset and say, I'm satisfied from a dopamine level, where like I'm okay with just moving away from the market based on what I made and not based on what I hope I can make. If that makes any sense, it's just more of a you have to change your mindset, right? Not every day is going to be a P&L day. Not every day you're going to make the most in the chat or most between your friends, right? You just got to be satisfied, what you were able to do in the market, because it's difficult as shit to extract money from the market on a consistent basis. And if you're able to start to do that, and if you're able to kind of minimize your losses and become a really good trader at that, like tap yourself on the back and say, you know what, I'm able to extract money from the market, and this is very difficult to do on a consistent basis, right? You're going up against some of the smartest, most brilliant people out there, some people that have millions of dollars back behind them, cutting edge software and technology. Like that's who you're going up against, and you're working off of a fucking MacBook and two monitors and TradingView, right? That's me, right? Right? You're getting your news from Discord and Twitter, right? Just think about it, right? Imagine if you was a NASCAR driver, right? Right? If you seen that movie with Brad Pitt, right? Like imagine you had their right. You're racing against people who have that information, right? You're coming there, and your crew pit just has a fucking red, a red gas jug, right? And they're filling up your damn car, right? They're using a fucking uh, a crowbar, to help prop your tires off, or using the little jack that you get in the back of your trunk to kind of take your wheels off. That's what we have as retail traders, right? You're going up against people who are executing at a much faster rate than we are, and that's the challenge that you have as being an individual trader who doesn't have that backing and that technology. So you have to tap yourself on the back when you're able to extrapolate money from the market, man. And being okay. I made $85 today. Clap it up. You know what? Because a lot of people probably didn't. Um, but yeah, that's all I really had, man. I'm actually happy I was able to speak about this. I think it was a good chat. Now again, I looked at the market yesterday. A lot of shit, kind of just little relief rally. For me, I don't think one day makes a market. Either direction. I mentioned Thursday, I think it was. The selling was broadening out. A lot of those things didn't see any continuation. I do want to look at SPY real fast. I don't think I really looked at the volume. I mean, not bad volume, but the volume on the downside is definitely heavier, and that's what you're more concerned about. When the volume down is heavier, I mean, price will go up on low volume. That happens a lot, right? Don't. But when it goes down on high volume, I think that's more concerning. Where we go down on higher volume, when we go up on low volume, okay, all right. But when we go down on high volume, be mindful of that. So yeah, I mean, when I looked at the indice, I think it's XLF. Right, this is the one where I was like, man, this is a nasty sell bar that day. Some a pretty above average volume. And I saw that across a couple sectors, but again, one day doesn't make a trend. Now, if we did something like, we sold that and then we opened up, and then we continued to sell down, you'll be more cautious, right? And right now, right, we did this. Now go into Monday or into next week, we continue to press higher. Well, all right, well, shit. Guess things are back on, right? And I'm not here to, tell you, oh, the market's going to do this, right? And stick to that, right? A lot of people, a lot of people don't understand is that, with your analysis of the market, um, you have to navigate with the market, right? It's almost like, being in a boat and you're paddling, right? And then the current gets strong, and now you gotta paddle a little bit stronger, right? Or it might get weak, and you can just ease up a little bit, right? You gotta just go with the current, right? You don't sit here and have this bias. I think for me, and it helps me as a day trader, and maybe it's different as a swing trader, or which way you want to go. But for me, um, being able to just kind of go with the flow, go with what I'm seeing. Like, okay, that's what I'm seeing, and that's what I'm seeing, right? And not trying to think about what's going to happen in 3 months, or think about what's going to happen in 2 weeks, right? All I'm looking at is what's occurring lately, and what's probably going to happen based off of what's occurring lately, right? And that's all I'm trying to do. I'm just trying to swim with the whales, right? I'm not trying to be a whale, right? And I'm not trying to be a shark and go out there and try to find something that everyone else is not looking at. Um, I'm just trying to go with the flow. No, just cutting with the wind, I guess is what I'm saying. So, but yeah, man, that's really it. I had plans to kind of look at the market, on this video, but I think what I said is good enough. We're going on 45 minutes here, just talking, not necessarily um, going over the markets. Really, I mean, not much to talk about. IGV is still getting fucking smoked. Um, I mean, crazy volume lately. You haven't seen this much volume in on this in ever, actually. Highest volume ever. Candle came back here. Yeah, I'm in software, and it's funny because, like, my Substack. I have a lot of software stocks I talk about. I'm still in no path, but actually it's pretty. Let me hold on. Let me do this. How can I? I want to do some. How do I? There's a way to see. There's a way I can see, like, this allocation of this. I thought it was. It has to be. It has to be this then. Did they move it? I remember seeing that here. That's where I remember being able to see. Um, oh, there it is, right here. Boom. Okay, yeah. So I mean, I'm okay. Yeah, right. So most of my Substack posts is 47% SaaS, and SaaS has absolutely got smoked. So, good thing is, some folks probably took profit. If you didn't, I think it's probably a good spot to, DCA, grab some more. The one that I haven't, like I mentioned, I haven't gotten into, um, is this you. And this one actually has been a little resilient, considering what's going on in the software industry, what's going on in, like, IGV. Now, this one I think you probably want to pay attention to, because it wasn't as beaten down, comparative to, like, that particular sector. This one really kind of caught my attention, how it's been holding up. Earnings is not until March as well. Yeah, so that was one. BBAI, I'm still in this. Again, like, I had covered calls. I sold those for 11 cents. Um, Definitely hope lighten the blow. 'Cause I grabbed this around like $7. So, but again, my cost basis is different based on that premium I collected. Um, I only had I had this, and I ended up selling it because I never got a full position. INOT is the one that I'm really, really thinking about to probably buy. Um, I remember I did my research on this. I think it's a good company. And I mentioned that down here in the $25 area is something I'm really interested in. Still love this debt to cash, this look here. Um, no annual look, good net income, getting very, very, very close, even on the trailing 12 month. to near profitability. That's really good. You know, you look here. Where's I looking at? Oh, over here. Go over here to the cash flow. Cash flow looks positive. It's been growing, right? So I like things like that. Um, you know, debt, very, very good at, you know, cutting their debt, right? You know, going from 700 to a billion and just cutting the shit out their debt. You like a company that's doing something like that, right? It shows, some financial solvency, and it shows, you know, hey, you know, company has a good hand on their financials. Right? You're not just out here just overloading in debt like Oracle is right now. You know, gross margins are good. Net margins, this is where you kind of just want to see a change, and that's what I'm saying. If you look at, you know, net income and you look at their net margins, right? It's just decreasing, and they're getting into that positive territory for net margins, right? I mean, they're already at gross margin. They're already grossing, you know, 70%. You know, for you know, a company like this, you know, that looks pretty good. So those are some of the things I look at. Some of the things I like. Yeah, I think this is probably something I want to look into, but I think the reason why I'm not in that because I did grad GitLab. This is when I grad. My cost base is around like 30, 33, 32 now. Um, right, and I never sold any up here. I like to hold my stocks for long term. That's how I was able to get in a position like Apple. That's how I was able to hold on a position like Amazon. Right. Imagine I'm in Amazon and that shit's down $40 in 2 weeks, 3 weeks. A lot of people would sell, right? But when you hold long term, you have a longer term horizon on stocks. That's what really helps you compound, you know, your long term portfolio. You know, a lot of people look for a quick buck and not think about holding something for, you know, 5 to 10 years. And I think that's what matters the most. Um, so yeah, I think we'll see what happened. I did start to buy Adobe here at around I think it was 294, and I bought a little bit more at 280, and then a little bit at 271. I haven't bought any more for this month. I think I'm done for this month. And I think I allocated enough money to it right now. Now I'll look next month to probably add a couple more shares and go from there. You know, I just grab at it. I just grab a share here, grab two shares here, right? Build into a position. That's kind of the way I look at it. That's how I was able to do it. You know, with Moderna down here, I was just grabbing shares, right? Got some money. Oh, you know what? This money just, you know, because I already have reoccurring deposits into my accounts. I'm like, oh, no, I'm about to go buy some shares of Moderna. I'm going to, right? Forget buying $200 for some Jordans. I'm going to put $200 in Moderna. Buy me another 5 shares. Another 5 shares. And I was buying this shit up, right? And now I'm just sitting in it. And, you know, for me, I wish I would have sold cover calls. I wish I would have sold cover calls at 50, 55. I did not. I think the thing I was thinking about, yeah, that's the one I fucked up on. I should have definitely sold cover calls on this. Cause like from 22, if I get this to like 75 or something, I could have sold those. Like, man, if you're gonna give me 75 in a very, very quick move, I'll take the profit, you know, and move on. But you know, we'll see what happens, right? I'm still holding it. I'll figure out. You know, after earnings, it's kind of like where I'm trying to. Oh, when's earnings? Earnings is next Friday. After earnings, it's kind of like where I want to see what I want to do with it. Um, but yeah, man, that's all that your boy got for today. I mean, I don't think I need to go over the market. We don't know where the fucking market's gonna go. We'll find out on Monday. You know, a lot of people were, you know, buying shit up uh, on 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 Friday, but like, man, these are shitty ass fucking setups, man. These are. I mean, I guess you say like a mean reversion, I guess, type of trade. I guess I can understand that. Like, some of these things are definitely like oversold, right? Stretched, bottom of the Bollinger Band. Right, if you're an RSI guy, I'm not an RSI guy, but maybe not on that one. But no, some of the things are definitely oversold. This one definitely got outstretched, bottom of the Bollinger Band. Then it had earnings, came down to like 28 or some shit. Right, so some people were playing no shit like that, but me, I was like, I'm not buying that. I mean, could it work? Yeah, but like that that's I think that's kind of bullshit. A lot of times, where like you just decide to buy it just to buy it. Um, and that can be the same time like when people just decide it's like, oh, I'm just gonna short this. Um, but at the end of the day, I mean, if it works, it works, right? I'm probably hating here a little bit because I did not buy any of these stocks that went up 30% or so. But yeah, I mean, not the greatest looks to buy. Like for the way that a lot of people I know like preach of what they try to preach in terms of their strategy. You know, hearing that they brought some of these stocks down there, it's like, is that really your strategy, or are you just out here just like slapping shit on? All right, and again, sometimes that happens, right? We're all human, right? Sometimes we just do shit to say, you know what, I'm just gonna go with my gut here. Right? We all want to gamble sometime in the market. We definitely do. I'll admit that. Right? Maybe you're just willing to buy some shit up, right? Or you just realize that this is probably a bounce, right? Our position is a little bit overweighted to the short side. I know if you go to PCC, where's PCC at on my chart? PCC was definitely heavily weighted, up here. Wow, what's this? Tuesday. Yeah, I mean we had. I don't really read this a lot, so I'm not gonna sit here and act like I do. But I know PCC was definitely up here, to the high side. Um, maybe let me move this to 1. All right, so put the call ratio, definitely got over 1 to the for the put side. Kind of see where was that. Where was that? All right, like this is like April. Like this is like the tariff lows. So you can see here we closed above 1, right? Heavily weighted to the downside. I probably I need to understand how to read this more. But yeah. Anything else that I want to talk about? I know I've just been just saying I'm going to get off or whatever, but we'll see. Oh. All right, let me open up. So I wasn't able to figure out how to I wasn't able to figure out how to like get all these damn ETF, these sectors that I like to look at on one chart. I don't know what happened. I can't do it anymore. But what I did was I just plugged them all here. Everything's here. SPY, QQQ, IWM, biotech, IGV. And really, what I'm just going to do is like look at something like this, like the last 5 days, right? And I'll just look at the numbers. I'll put my cursor over here. I say, all right, what did well this week? Oh, we had KRE was up 6%, 6.9%. So let's go look at KRE real fast. See what we got on KRE. All right, KRE still ripping. All right, so KRE was up. Interesting. Last 5 days. And why the fuck does this say 4.82%? And if I go over here, where's KRE at? Monday, it says 6.94. Maybe it's judging from the lows. Oh, okay. Maybe it's judging from the lows. Let me go here from the lows. Nope. I don't know. I don't get it. I don't know why it says that it's up. I don't understand why that says it's up 6.8%. 6.9%. Oh, I got it on 5 days. But that's what it says. It says it's up 6.9% on the week. I don't know. But yeah, I mean, you can see it did perform well. No, solar performed well. Home builders performed well. I think this is what is this? This is materials. Materials performed well. Industrials, uh, consumer staples performed well. Retail kind of balanced towards it as well. Year to date, right? Let's keep that in mind. Year to date, what's doing well? No, solar is up 11%. SMH is up 11%. KRE is up 12%. Retail is up 4. Um, Consumer staples up 13%. Like, that shit matters. Like fuck. I gotta go look at consumer staples. What's in this basket? Let's go check out what's in XLP. Right. And I was like, God damn. You telling me motherfuckers sitting here buying Coca Cola and Pepsi and what else? Is that the move? Oh, what time is it? I know they got a birthday party at Costco. I know that really good. Yeah, so I know some people definitely are in this. I know Dollar General. What this do? This is actually Dollar General. It's actually been DJ. Ooh. Hey. I would love for it to build out just a little bit more on this Dollar General. And shout out to TSDR, man. TSDR trading on Instagram. He kind of got me into like just not like, oh, yeah, this looks good right here, but like thinking about like how I want it to kind of build out over like the next few days or so. Um, I definitely kind of took that notion. It definitely improved my trading. Um, yeah, I kind of like just want to see this build out a little bit more. Like the way he like to say it, I want to see it get tight. I want to see price action get tight. I like something like that maybe, right? Then we blast. You know, it doesn't look bad though. This Dollar General does not look bad. It does. I mean, it doesn't look bad to me. It's something I think you can watch. It definitely. Like, and if you look here, on the weekly, right, it's flagging. So that's the thing, right? You can kind of see the higher low setup, kind of flagging here on the weekly, right here at the 200 week moving average. Right, if we go to the daily, you can kind of see the flag. Now the question is, like, if we go to our hourly chart, do we have that same look? Right. Yeah. Still. Uh, I mean, somewhat flagging on the hourly, even right here. All right. So you got that same look across, all three charts, from a top down approach. You got somewhat of a flag here, kind of pull back. Um, have your line in the sand at 144. Um, the sequence here for like this to be like a higher low would be, I think, above 148. Right now, you might be in a position where you can just put it below this. Hold on, I'm on the wrong chart. Let me go with this one. This one has my moving averages. And let me do this. And let me take off, because I don't necessarily use the hourly EMAs. Yeah, I mean, this doesn't have a bad look to it. Right, you kind of got the pull back to the EMA 20. Right, this would kind of be like your area to make a higher low. I think honestly, I think I was probably thinking of this wrong, but really, like, if you get a green candle, you kind of take out this high right here, like 147.50, I mean, now you can risk right below here, like right below here. It'll be below the Friday's low as well as the EMA 20. I mean the EMA 9, right? I think you can kind of get it to take out that, right? I mean now you're kind of like looking at a position that could potentially go higher. I don't know. That's kind of what I see on it. Um, just looking at these candles real fast. Yeah, I mean, if you want to be more confirmed, I mean, you want to wait it out a little bit more, maybe take out, Friday's high, right? Me, I like to get in where I can risk less. Like if it takes out Friday's high, where you gonna pitch your stop at? Still, you gonna pitch your stop back down here, right? So, like, why not try it here as this being the sequence of a higher low? So, but all right, man, that's all for me, man. This has been an hour. Peace. God bless.